loathe it, as an investor, you simply can't ignore it. Digital currencies, blockchain, smart contracts, NFTs, Web3 and more. We want to understand and explain the entire ecosystem, which is evolving by the day. We'll talk to the developers and investors in the ecosystem to find out where the opportunities are. Join me for Cracking Crypto, weekdays only on ausbiz.
Cracking Crypto is partnered with City Index. Trade shares, CFDs, Forex, crypto and more with a trusted provider.
The Call is brought to you by CMC Markets, a world-leading online trading platform for CFDs and shares around the globe.
G'day and a warm welcome from Barangaroo Studios. This is The Call, 10 stocks picked by you, 2 experts, 1 hour. It's Friday the 25th of March and I'm your guest host, Scott Phillips from the Motley Fool, and thank you for joining us. And today we have 2 spectacular experts on today's show for the whole hour. He's already laughing. Joining me on my left is Adam Dawes from Shaw & Partners. Welcome,
Thank you.
Adam.
Absolutely.
And Mathan Somasundaram from Deep Data Analytics. Welcome, Mathan. Thank you, gentlemen, both for being here. It's been another busy old week on the markets. It's been all over the place. We've seen stocks go up and down. Mathan, you were mentioning to me just off air, it's amazing how long you can do this gig and still be surprised in the morning. So let's start with you. How are you seeing where we're at with markets at the moment?
Yeah, I think anyone who thinks they know what's happening day to day are dreaming. I think so the last count, I think it's 12 out of the last 18 days, pretty much for the March. It's had more than 1% move in the US market.
It's crazy, isn't it?
And most of it is on nothing. I mean, there's a lot of macro moves. So trying to work out on a day-to-day basis, it's a fool's errand. You're looking at a market that's doing a lot of things, and there's a lot of factors. So yeah, it's fun times. I actually enjoy it. I actually enjoy the mess.
Gives it fun, right?
Oh, the chaos is great. So I love chaos.
Adam, you a fan of chaos?
Well, clients aren't fans of
That's
chaos.
the problem,
and
right?
So that's the problem then, because then I get the earful where, what's going on? How's everything? So so yes, I am, because obviously volatility creates opportunity. And I think that's sort of where we are in the market at the moment. That volatility is definitely creating a lot of opportunity. We're just sort of getting over reporting season now. We've passed that. We've got some numbers. We can all sort of look at those, digest all of that. But even this, the skirmish, the war that's going on, our market has been stronger since. The US market has been stronger since, and it's not really following any kind of traditional pattern. And I think that's what's unnerving people, is that if this happens, then this should happen with the market, but it hasn't really sort of played out that way. And obviously inflation and interest rates is keeping everybody on tenterhooks. So besides that, I think it's been a great week.
Other than that, it's been perfect. It's actually possible, depending on how today's market activity goes, we end up actually in positive territory for 2022, which is saying something.
Yeah,
all right, so let's get to what we're here for, which is to cover those 10 stocks sent through by you, our viewers. Today, we are going to cover in the first half of the program, Infratil. We're going to cover Elmo, Clinuvel, the Global Data Center Group, and Kathmandu Holdings, which has now been rebranded KMD Group. That's a really broad range of ideas, guys. We've got plenty of stuff to talk through with that list. Before we do, we always do a stock of the day. And I thought we'd have a look at Premier Investments. Now, this is Solly Lou's business. One of those companies on the ASX that has this name that has nothing to do with the business, and you kind of think, what is this thing? It turns out it's Smiggle, Peter Alexander, Just Jeans. I won't steal all your thunder. Results out.
Yeah.
I'll start with you, Adam. What were
Yeah.
your thoughts on Premier's result today?
Look, I think the results were actually quite good because you need to take obviously into consideration COVID and how those lockdowns have happened. Logistics has also played a massive part in getting the inventory and getting the data there and all that kind of stuff. Total revenue slipped by about 2%. I think that was a pretty good pretty good number. And net profit was down about 13% to 163 million. So, markets are probably potentially not liking the result as much as they would. But I think they did well on the dividend. Declared a 46-cent dividend, 34 cents last year, raising the dividend. They did say that they're starting to see some momentum coming back in their Smiggle stores as the kids go back to school. And Peter Alexander, you pay $100 for a pair of pajamas, but there's got to be some profit in there somewhere. So overall, I think it was a good result. Solomon is a fantastic operator. He can't go wrong with what he does. He knows exactly what he's doing. So look, I thought it was an okay one. Probably the stock price probably could come back a little bit. I think it's had a very good run and it's always represented a premium in the market. But look, overall, I think it was a good result and I'd be very comfortable to be looking to pick some of this up at these levels just because management is so good. So I'll say a buy on this one.
Excellent. Premier Investments, a buy from Adam Dawes. We have started you in positive territory. That's a stock idea from Adam. Mathan, the market doesn't love the result, at least as much as Adam. The shares are off a little bit today. Where do you sit on this one? Is it a buy for you? Are you sitting on the sidelines, or are you ready to offload it?
Yeah, we've been offloading it. I wouldn't be a buyer of Premier. Look, they are Premier investors. Solly Lou knows how to buy a business.
He really
right?
does. He really does.
So there is no doubt that it's a really good business, high quality business, global play. They do it really well. But 2021 was peak retail. Right. This is peak consumer spending. I know a lot of brokers said there's so much, pent up demand coming through. There'll be a lot of spending. It's after the event. Okay. We've had the peak cycle. You cannot get the handouts that we got in 2021. Kids were loaded up in cash. So the spending will curb through this year, especially when you got rates going up. It's just a sentiment of that. And I think when you look at where things are, I think retail's priced for a massive positive cycle that they have to cycle through. It's going to be hard. Look, Premier is one of the best players in the market. Out of the retail sector, I think it's really hard. I'm just not picking anything out of the retail. Right, okay. But there are some that are at the top end. Even the ones that don't look so good, you got to look at the guys who've really done well. Like someone like Shaver Shop. You just don't look at that and go, it's a great business. But they've executed phenomenally well. So the guys who have executed well, Premier is one of them, you keep on your shopping list. It's a cyclical. So you buy these things when they're beaten up. And when interest rates are going up after a fair amount of stimulus pool, I think you've got to be tough on that. And the multiple, it always attracts a premium. That always scares me. It's like a CommBank. When people don't know what to do with banks, they just buy CommBank. Right. And that's my worry. Everyone who wants to own Premier already has Premier. So where's the marginal buyer coming from? I think it'll be tough. So I'm staying out of retail, but Premier is one of the best. So when the cycle comes off and everyone hates retail, Premier is the one you buy.
Very good. There you go, guys. We've got a buy and a sell from the same stock, our very first of the day, which is our stock of the day. But let's now move into the companies that have been sent in by you. Speaking of macro, Diane wants to ask our experts about Infratil. And Diane says, could you give me your opinions on Infratil, as my son is asking? Is it a buy? We always like young people asking about stock recommendations. We love the fact they're investing. So, Mathan, I'm going to kick off with you. This is an infrastructure player in utilities, energy, airports, digital infrastructure, social infrastructure, almost everything. Maybe that's a bit of a blanket statement. Maybe they genuinely are got bits of everything. Does it make it harder to analyse, easier? What do you think of Infratil?
Oh, look, it is a science project. It's tough on the average person. But these are I don't consider this as a stock. It's more like a listed private equity. Okay. They trade assets. So you got a few in different sectors. You've got Wesfarmers, you've got Goodman Group, you've got Macquarie, and Infratil is one of them. For a start, it comes out of New Zealand. Anything that comes out of New Zealand, it's usually pretty good. Okay. So that's one thing to look at. That's heuristic, okay. And they buy a lot of assets because a lot of tech gets basically tested in the New Zealand market, and then when it works, they split it out everywhere because it's a good controlled market. Right. Now, then they get rid of a lot of those assets, and these guys are very good at buying these assets, running it well, and selling it to the right partner. Okay. So, look, they've got data centers, they've got everything you can think of, and this is one of those stocks you buy for the long term. because you trust the management and the track record is phenomenally good to manage that and buy and sell assets through the cycle. So the only problem is everyone knows that. It's priced for that. So it's a hold if you have it. I'm not selling it, but it's a hold.
Right.
But if you want to buy it, I think you wait for the usual market cycles. When the market comes off, these listed private equities, you buy them and you hold it for the long term. So for the long-term buyer, you wait for the weak cycle to add. So Infratil, I think it's one of the high-quality business models that you buy, but it's priced for that right now. So I don't see a lot of upside in the short term, but the long term, look, these guys are good. They'll deliver.
Very good. So that's a hold on valuation.
That's right.
If you get the opportunity at the right price.
If it comes back with the market turmoil, you buy this thing.
Beautiful. Now, Adam, this is a company that's in theory an infrastructure business. You kind of think boring, plain, asset heavy. Mate, this is, well, actually, it's more like a private equity company. It's more like a venture capital mob. That's a very different way to think about an infrastructure business. Where do you sit on Infratil?
Well, I'd add another one. Soul Patts is another
Yes,
business that would do the exact same to what this does.
Right.
And as Soul Patts has done before in the telco space, Infratil owns most, or I think about 49% of Vocus and Vodafone. So that has been an interesting one for, and again, New Zealand market's small, so that they're able to do that. So that is one of the things. I really like their data center play, and we're going to talk about another data center business in a second. But that CDC data center has risen over 15% in the last 6 months, so reflecting a really good pipeline of development. But this thing has really gone, so I'm with Mathan on this one, it's a hold because of valuation grounds. This one has really risen on ESG. They'd had a lot of sort of wind farms and they did a lot of that kind of stuff, and they really hung their hat on that over the last year to 6 months. That has really sort of pushed this price a lot higher, which is fine and nothing wrong with ESG, but it certainly means that potentially there could be a little bit of a pullback there on that one as well. But look, the dividend looks okay as well, so it doesn't. It's okay to me, but yeah, valuation. It does look a bit stressed, and it is quite illiquid as well. I was looking at the screen this morning and looking at the bid and the offer. There's not much on the offer, a lot on the bid, so you just got to be a little bit careful sometimes with those stocks that are illiquid. You get a big seller in there, that's where you could see some price movement to the downside.
I will ask you too on that. With an illiquid stock, are you thinking about a trading strategy or a buying strategy? Is it about using limit orders? Is it about simply waiting and leaving it on your watch list and taking advantage of those big movements we can see with liquid stocks? How do you think about that?
If you saw some volume coming into the screen and you know you're a buyer, then you could potentially then start to look at that. Secondly, when there's a lot on the bid, potentially people have forgotten orders, or they sort of just leave them in there, and so everyone's sort of moving above, so it's not really active. So it does seem to me that you just got to be a little bit careful. But also, if you're in a liquid stock or trying to get access to a liquid stock, I really use the process of a third. So you buy some, you get some of your position. If it starts to move higher, top up with another third of that position. If it comes back down, using that third to get your full position. So you're not showing your full volume in the screen, because I think that's important with the algos these days. They'll eat you alive when you go into those screens. So just being a little bit careful and just using a third to get your position solid. I think that's a good strategy for illiquid stocks.
Beautiful, thank you, Adam. And again, great insights from our experts on the program. Let's go to our second stock, well, our third stock of the day. We talked about Premier, of course, at the top, but the second stock asked by you. This one comes from David. David's asking about Elmo Software. And David says, I hold shares in Elmo. Most financials look ordinary, although ROE, return on equity, has, and he says in quotes, improved from minus 25% in 2019 to minus 5% last year. And the multiple, he says, is relatively low. I think, says David, Adam Dawes gave it a tick, and I'm interested in his current thoughts. So we will start with you this time, Adam. Let's talk about Elmo Software. This is a small, medium enterprise HR business.
Correct.
David's saying the numbers are getting better, but from really bad to only a little bit bad is kind of the inference here.
Is the inference,
Is it less bad enough? Is it getting good enough to be a buy?
So we cover this one at Shaw & Partners, and we've got a buy rating on it, high risk, with a price target that's way above where it is at the moment.
Wow,
so I'm potentially don't need to tell you where the price target is, but it's a lot higher than where it is at the moment. So I think Elmo this this full year, gave some really strong results for 2022. Guidance was upgraded with its business, and with its momentum potentially with winning those new businesses, as far as strong existing customer growth and lower revenue churn. it does represent some value down here. Now, all tech stocks have been absolutely massacred over the last sort of 3 months, and there's been a bit of an uptick in the share price now. I still think that there's still some fair ways to go on that. I do think that obviously we potentially, can I call the bottom of the tech stocks? I don't know if I can.
Oh, I thought you were going to give us the headline, Adam.
But Alibaba the other day, or was it Tencent? $25 billion buyback. I think it was one of the big Chinese ones. I think really definitely signalled the bottom of that sort of, and that gave some confidence for the people to get back into tech. We've got a buy on it, so I'm going to stay with my analyst on this one and say a buy, because I think it does represent good value on 2022 revenue multiples going forward.
Beautiful. So a buy from Adam from Shaw & Partners on Elmo Software. Yes. Mathan, Adam mentions high risk, a big upside potential, and that's often the case with these companies. There is a lot that can go really right, and if it does, huge upside.
Sure.
Also, potentially, things can go wrong. That's why it's high risk, as Adam says. Where do you sit on the Elmo question?
Yeah, so, I mean, I think as Adam said, the techs have been belted. Yeah, so we've been staying out of tech for a good part of 9 months.
Okay.
We knew yields are going up, and the techs will get hammered. It's trading. If you look at what's happening to NASDAQ, you're pretty much seeing the same kind of bash, rebound. So it's the thematic that's playing out. Aussie 10-year bond yield, it's 2.7, 2.8.
Yeah.
When you look at it in the US, the 10-year yield is almost now greater than what the market provides as a yield. That's been a long time. So we're talking about the Aussie 10-year is now back to 2018 level. So there's a fair amount of valuation uncertainty that's playing out. Will that hold? What's going to happen to the market? So we're still going through this up and down. So the growth versus value trade is playing out. And so those kind of uncertainties will weigh on them. I mean, the positive news is, look, it's down near the pandemic lows. So there's a fair amount of negativity priced in. Mind you, in saying that, there's a lot of tech stocks I can say that about.
Absolutely.
So in that context, it's tough. My problem with Elmo is just it's a sector where I don't see a huge advantage that they have.
Okay.
Now, the main thing that in tech you kind of get to is you either have to be first mover, or you have to have this phenomenal tech, or you've got to have scale, right? And I don't get that, and I could be wrong, but this was a market darling.
Yeah.
So there's a lot of people who are in there who are suffering. So the good thing for you is if you're already there, there's fund managers, when the market turns, will buy into this and get you back up because they need to make their numbers look good. So you get that carry trade.
Okay.
But the bad thing is at the moment, all techs are in this boat and it's hard to work out. So I think it's just too hard at the moment.
Okay.
But it is one that I'm keeping an eye on because there's nothing like self-interest. When fund managers need performance, these are kind of stocks that will come back hard.
Right.
So just keep an eye on it. But I think in the shorter term, you're going to have a lot of uncertainty with tech. So I'm not jumping in yet. I personally don't think we've seen the bottom in tech because of what the Fed is doing.
Right.
So that needs to stabilize, and the market still doesn't quite work out where it settles. So I think the next couple of months that'll settle and we'll get a better understanding. So look, I think it's an interesting stock, but I'm struggling to see the risk return in the short term. So I'm staying out of it. So if you held it, you've taken the pain. I'm not selling now because it's a psychological thing, right? You're at pandemic lows, so you've taken a fair amount of pain already. But if you're putting new money, I'm not going in right now.
So I can put you down for a hold, Mathan?
Yeah.
Wonderful. Thank you very much. Our next question comes from Ben. He says, I'm interested in Clinuvel, as I think the price has bottomed after significant price falls over the last few months. Is now a time to take a nibble? Now maybe Adam Dawes might come in at time with his buying in thirds, but we'll start with you, Mathan, from Deep Data Analytics. Tell us the story of Clinuvel and how you're seeing it. Has the price bottomed? Is there value opportunity here, or is this one of those value traps that often we talk about?
Look, I'll go with the macro first.
Go for it.
The biggest thematic that you've got to remember in the markets is you've got to look at the risk-return profile. So this is a biotech. I actually think this is not a bad biotech.
Okay.
It's got a few things going for it. Management's pretty decent, but the market's interest tends to be very focused on one area. So when commodities are on fire, biotechs do not get interest.
Okay.
It's dominated by commodities because the blue sky investment. So when commodities are nowhere to be seen and China's not doing anything, then biotechs are on fire. So the thematic right now is commodities. everyone is chasing the next hot commodity. Mind you, everything is hot at the moment. So yeah, as long as you're there, you've been going up. So I think it's hard for biotechs at the moment, and they're also high growth stock perception. So you've got funding issues, and these guys, I'm a sucker for biotechs, so I'll say that from the start, and I've followed a lot of biotechs for decades.
Okay.
And they take decades to become overnight success. They have to burn through so much cash.
Yeah.
And you're the sucker who's paying for all that. So you've got to be really there when they're executing through the final stages of a product and the potential upside, and then the market gets excited. When that happens, you ride it. If it's going to be actually eventuate as a product, then you ride it all the way. Okay. If it doesn't, then you take profits. You've got to manage your risk return. Clinuvel at the moment, for me, is in a stage where the market's worried about the funding, it's going to be cap raising, this is what's going to be played out. So most biotechs are in this cycle. So I wouldn't rush in. I'll stay out of it. I'm waiting for when market starts to get bored of commodities, that's when you start looking at biotechs.
Okay.
Right now, commodities are too hot.
Okay. So is that a sell or do we call it a hold?
Oh, jeez.
Sorry, mate. I'm going to have to ask you.
Yeah, I know. Like, you've come back so hard, and you're looking near the pandemic lows. So if you've taken the pain, you hold it.
Okay, another hold
you
on
hold
the same
it.
basis.
But if you're not fresh money, I wouldn't jump in right now.
Wait for some movement in the share price.
That's it.
Very good. Adam, Clinuvel, it's in vascular and genetic disorders. These are the sort of companies we all hope will be successful because a breakthrough for the business means a breakthrough for the human race, right? It's hard to dislike these companies. As Mathan said, though, these are businesses that have a really long-term track record of eating shareholder capital.
Correct.
The occasional success we love to lionize because they can be spectacular, as Mathan said.
Returns
so many go by the wayside, though. Again, we talked about high risk, high reward with Elmo. Is Clinuvel another company in the same vein?
It's definitely high risk. There's no doubt about it. So yeah, absolutely put that on the table. But Mathan, when is Australia's investors not interested in commodities? So I just like to put that out there.
Actually, it's actually funny how you say that, but it is actually true. If you look at when the commodities get hammered,
you're right.
These
Commodity
things go,
prices get hammered.
When they get hammered, these things go berserk.
Because they're looking for
and
something else.
I can put out about 10 or 15 off the top of my head because I've lost money on them.
Yes, and I've lost a lot of money on them too. And that's where investors should be very, very careful.
And yet, we're suckers for punishment.
We are.
We just go back and make the same mistake.
And one of the things is what you talked about is there's some fantastic, if they get it, like is this whole thing of if they can get it and if they can hit the milestones, if they can hit the end point, it's going to be amazing.
Yep.
So for some of these products, there's a lot of lack of choice out there for customers as well as investors, but lack of choice. And so these guys can price gouge as much as they want because there's really not that many drugs or these kinds of technology that's out there. In saying all of that, the stock definitely looks like it's potentially found a bottom here at 18.50. But I'd be really cautious. That chart's telling me that it's going to go further. So I would not be a buyer of this one, only because I don't understand the stock.
Yep.
And I'm always a firm belief that if you don't understand what the company does, you shouldn't be investing in it. And I'm not a doctor or a scientist, and that's where you need some of those experts in there to really tell you how to do it.
It's actually one of the better management.
Right.
It's actually one of the better management in that sector.
Yeah.
But when the tide goes out, it doesn't matter how good you are.
Exactly, and that looks like the tide's going out a little bit on that share price. And obviously, you see the big spikes, and that's where the volatility comes into it. And if you're on the right side of that, it's a good trading stock potentially.
Yes.
But you need to have some conviction with that one. So for me, Scott, it's a sell.
A sell, excellent. All right, we have a sell from Adam and a hold from Mathan on Clinuvel. Big risk, big potential opportunity. The chance of that opportunity actually coming to fruition, well, that's the big question for investors. And this is one, if you're going to invest in it, I think you heard from both gentlemen, this is one of those ones that's, well, frankly, it's a bit of a risk, right? So just be careful as you buy. If you're going to, know what you're buying, know why you're buying it. Our next question is on Global Data Center Group. You mentioned earlier, Adam, that Global Data Center Group was one of those businesses we would talk about a little bit later.
Yep.
Much smaller.
Yes.
Was 360 Digital, I think, from memory, then renamed.
Correct.
We've talked about Infratil. We know NextDC is around.
Yeah.
How do you think about Global Data Center Group? Is this an imitator that's going to make a lot of money? Is this the third place runner, maybe fourth in a busy space?
Yeah.
How do you contextualize Global Data Center in terms of its business?
Yep.
And then what do you think of the stock?
So I've been well recorded in the media saying that I like GDC and it's a buy, and I'm going to stay with that buy because basically there's a couple of big key thematics going forward. Now, the Internet of Things, how many Internet of Things have we got 10 years ago to where we are today? And the amount of things that are connected to your home at the moment, whether that's the car, the fridge, it's the iPads, the phones, everything else that's going on, and more things are getting connected. So where does all that data go? It has to go somewhere, and that is a massive spend for, let's just say Google, Amazon, and I'm not saying this is anything comparing to those kind of companies, but that's a massive spend, that all these data centers and putting that. Now, NextDC has done a fantastic job, and it's the leader in the space, as you rightly point out. But the difference, and what Global Data Center Group has done versus a NextDC has obviously looked at Australia, and trying to buy land here in Sydney or Melbourne has been very tough for these guys, because you do need to be near hubs, and you do need to be near these kinds of things for where data is flowing. And that's been a bit of a drawback for NextDC, is that they've had to pay up to get to those kinds of businesses, or to put those data centers around. Whereas Global Data Centers, yes, it says in the name, global, they have decided to go further afield, and they've got data centers in France, in South America, in Guam. Now, Guam, I don't know if many people know, but Guam is actually a major internet hub around the world, because it's US based. There's an army base there, but a lot of the sea cables go through Guam to then go through to Asia and all around there. So they're actually putting data centers in Guam a lot cheaper than what you would get for something like a NextDC. So this one has underperformed. It's currently around $1.60 at the moment. It hasn't fallen with the rest of the market. Okay, so it has fallen a little bit, but it is thinly traded as well. But we've got a price target. We've got a buy on this. It is, again, high risk, but we've got a buy of $3.22 on this one. So it does have some very good upside to it. One of the things that we do like, that they did take a substantial investment in AirTrunk, which is a very large Macquarie-backed data center business as well. The problem is that they can't report on that, because it's AirTrunk and it's private. And so, albeit they've tripled and 4 times their money on it, they're struggling to then report that back to the market, because it is in a private business. So again, it's really tough, and getting rid of 360 I think was the right thing to do. I'll shut up now, but I think the GDC is a buy. It's trading at a significant discount to NAV, and I still like it. It's a buy.
There you go. Big trends, lots of potentially hidden value, big upside potential for global data centers.
Wrapped up.
Thank you, mate.
Yeah, absolutely.
I get the easy job. I just get to repeat what you've already said. You bring the expertise. I just say it again and make myself sound smart. Speaking of which, Mathan, I'm going to do the same for you in a minute. Tell us whether you agree with Adam. Is global data centers the way to go? Growth in data, growth in speeds, undervalued, big opportunity? Or is this the poor cousin to some of the bigger boys in the space?
I think it is the poor cousin, but look, when the tide goes up, everyone goes up. Data is the next biggest commodity.
100%.
You know, maybe I'm talking my book, but still, data is the biggest thing. Look, it's going to be around for decades to come, and everyone has a lot of data. They just don't know what to do with it. Now, a lot of people need to store it because they're getting so much of it, and now they're collecting everything because they don't know what they might do in the future. So yes, data centers are going to be huge. I think NextDC had a great model, right? What they've done in Australia, it's kind of like, I guess it's like the Westfield. They get all the bigger players, the interlink makes it such a connection, right? So you basically suck it in. Once you're in, it's hard to get out. They own a lot of that, where GDC owns parts of a lot of different, so it's a bit harder to control, but they have a lot more in different places. So there's a certain amount of diversification, but at the same time, you don't have the control as much as NextDC does. Now, NextDC is, of course, run into a growth issue, so they have to grow out, so they're changing their model slightly, so that raises risk there. So, look, I think the data centers, all of them will do well. The macro is very positive. And I think over time, there will be a rush to consolidate, because the bigger boys need space, and they need warehouses. These are data warehouses, so they will buy, and so there will be consolidation played out. So I think that's the big thematic. I think overall the thematic is positive. I still think NextDC is probably the leader in the sector,
100%.
but you can buy GDC or you can buy Infratil, and because there's a substantial part of valuation in Infratil is the data center. It's a bloody good, it's a government data center, bloody good data center. So there's a fair amount of data center plays out there, and I think it's pretty decent. I think they're doing quite well. So I think it's positive, you buy it. But look, all of these things with the tech space, you're going to have a bit of a uncertainty over the next couple of months, but this has had a decent pullback. I think the macro is positive enough that you can take the risk. So I'd be a buyer.
Beautiful. Put you down as a buyer. Thank you, Mathan. I'll tell you what, you get some great content here today. Exactly. A double buy for Global Data Center Group, which is important. All right, gents, I've talked too much, not you guys, I've talked too much, but we're a little over time. Let's go to KMD Group, or the business we used to call Kathmandu Holdings. Of course, it now changed its name because it owns Kathmandu plus Rip Curl and some other brands as well. Nancy would like a view on KMD. We talked about retail a little bit earlier, Mathan. You made some points about you think that we're at the height of retail. Premier is one of the better ones out there. Does Kathmandu also get a Guernsey in that category, or does it have to be left on the reserves bench?
Yeah, it's probably the top end of mid-tier.
Okay.
The thing about Kathmandu is the original model, they do most of it, and this is going back, retail analysts used to tell all these things and I used to try and remember. They make a lot of it in the middle of the year, around July, August.
The winter time.
Exactly. Yeah. If it rains during that time, sales are crap.
Yep.
And also the other thing they used to say is in Christmas time, just look at when the sales start. If they start coming around November, that means they're struggling. If it starts later, they start their sales, that means they're doing better.
Okay.
So you look at all these things and go, yeah, we started our sales pretty early and the weather looks pretty crap. So I think the risk is there. But Kathmandu is a very good business. I do like it. And the brand diversification has made it better.
Okay.
Remember, this has been through a number of takeover bids as well.
Yeah.
So you can never ignore that. I think there will be more bids coming. And I think where you are with tourism and people wanting to go out and do things, this will benefit out of that. So I think it's a positive play. So yes, it's not your premier investment top end, but I think it's still a very good business. So it's one where I'm happy to take the risk, but just be aware that the sector is going to have a tough time.
So more volatility to come, but a buy overall, you think?
That's right.
Fantastic. Thank you, Mathan. Let's go to you, Adam. Let's see if we can get another double buy to finish off our first five.
No, we won't.
Oh.
No, we won't. I mean, if you didn't go for Premier Investments, why would you go for this one? Premier Investments is the top end. This is the top mid-tier.
I know, but the reason I say that is everyone who likes Premier has Premier.
Right.
Every fund manager that I know who likes Premier already has it.
So high quality stock, less attractive buy.
Yeah.
Kathmandu possibly a lower quality business, but a more attractive way to
because there's less people.
Right.
So the marginal buyer will come in when things look better. The turnaround in Kathmandu is much higher than Premier because everyone knows about Premier. I think it's hard to be shocked by Premier.
Well, everyone knows about Kathmandu as well. I mean, we've all seen the jacket. We've all seen the sleeping bag and whatnot. But look, overall, I think they're post-COVID, they're doing okay. Overall, they're looking to go further afield. So in other words, going internationally or growth ambitions going outside of that. So I think that is good as well. But for me, I'm going to stay with the big end of town. Kathmandu, as Mathan already pointed out, does very well in those winter periods, and so it could be for a trade. You're coming into that winter, it's going to report. Usually, if it's cold winter, they will do very well. So you sort of play that a little bit. But for me, I'm going to stay neutral or a hold on that one.
Staying on a hold. We couldn't quite get a second buy. But I'll tell you what, there's been some great value already in this program. So let's recap the first 5 stocks plus our stock of the day. We started with Premier Investments, which we got a very different view from the gentleman here. Adam Dawes from Shaw & Partners said Premier was a buy. Mathan Somasundaram from Deep Data Analytics said it was a sell. That's why you listen to this program. That's why you watch this program, because you get both sides of the coin. It's really important that you understand when you're buying, what you're buying, and the guys have done a fantastic job with that. Let's then go to Infratil, which was a hold for both Adam and Mathan. Elmo Software, Adam gave it a buy. Mathan said it was a hold, bearing in mind the different risks and opportunities there, and particularly because in Mathan's case, the tech sector had been so beaten down. When it comes to Clinuvel, Adam went for a sell, saying if I don't understand the company, I'm not going to buy the stock. Mathan, bit of a sucker for biotech, thinks there may be opportunity there. One of the best management teams in the business, he says, and that's really important, particularly in this area where it's hard to draw a straight line through the business. If you can trust management, super, super important. Global Data Center Group was a buy from both gentlemen, so that was encouraging. We know that data centers are going to keep growing. Digital assets are where it's at. It can be successful despite the big dogs in the room. NextDC and others having big businesses. This sector is so attractive and growing so well, you don't have to just pick the winner in this space. So Global Data Center Group, I should say, is a buy from both. And Kathmandu, a hold from Adam saying, look, business is okay, not a great set of results, just wait and see, maybe there's a trade opportunity. Mathan taking the other view and saying, look, yep, not one of the highest quality retailers out there, but a business that isn't over-owned. there is the potential for more people to come into the register if and when things start to improve. And if and when that does happen, there is some opportunity to buy shares in Kathmandu, or KMD Group as it's called now.
Grab a beer, grab a glass of wine, because this is where we just gossip.
It has been easy to get this bull market wrong.
Cheers to you.
Have a great weekend, everyone.
The Last Call is brought to you by Australian Vintage Wines. Invest in the home of Australia's premium wine brands.
Welcome back to The Call, where we have 10 stocks suggested by you and 2 experts. And for a Friday afternoon, we are in luck. We have Adam Dawes from Shaw & Partners and Mathan Somasundaram from Deep Data Analytics, who have already given you some wonderful information. If you haven't seen the first half of the program, make sure you catch up, because there is some great information you've already lost, including a double buy, couple of holds, and some different perspectives, a buy and a sell on the one company. You'll have to watch that back. We are going to cover another 5 stocks in the remaining half of the program. We're going to talk about Australian Clinical Labs, PlaySide Studios, a company I'm going to say I don't know particularly well, so I'm looking forward to being informed by Adam and Mathan. We're going to talk MaxiTRANS Industries, IGO, and round it out with Hipages. Again, a great combination, a great selection of companies brought to us by you. And of course, don't forget, you can get in touch and ask for the companies you want to hear on the program, see on the program as well, of course, and understand the businesses that you like. We'll get our experts to give you a view. Speaking of which, let's go to a question from Kim. And Kim asked about Australian Clinical Labs. Kim says, I would like your experts to give me a view on ACL, please. Now, Australian Clinical Labs, let's start with you, Adam. It's a business that has been a massive beneficiary of COVID.
Yeah.
Obviously, testing is huge. We've seen others. Sonic Healthcare's had a spectacular last 12 months as well.
Come back
business-wise,
off now.
Right. Well, share price-wise come down. Business-wise, done really, really well.
Agree.
So that's probably the question, right? You look backwards and say, how great are these companies?
Yeah.
The market seems maybe to be looking forward and saying, maybe the future isn't as bright as the past,
That's
or
right.
maybe as a buying opportunity because the market's lost interest. And to Mathan's point before, when investors lose interest, that can be an opportunity because that's when you get some cheaper prices.
Yeah.
What are you thinking about Australian Clinical Labs? Is it an opportunity, or is it one best left on the shelf?
Well, I'll use Mathan as well as another comment that he made that is probably as best as you're going to get, and that was last year for this one.
Yep.
I don't think you're going to get any better this time around. So Australian Clinical Labs, look, it's an interesting business, and they just did a very large acquisition or transaction with MedLabs, which was an interesting one. They actually got it pretty good. They were actually pricing it for around 60 mil. They got it for 52 mil because of the data and everything moved around. So they're actually able to pick it up a little bit cheaper, which I think is quite good. But for interest of time, I'm going to say no. No for me.
On business or valuation or both?
Business-wise, I think that they were looking for some further upgrades inside of the business and just didn't get it.
Okay.
As well as I think last year, they're basically not going to be doing as much testing as they're going to do this year.
Yeah.
So I think it's something that you could definitely find better value elsewhere.
Beautiful. Call it a sell?
A sell,
Cool.
absolutely.
Let's go. We've got a sell to start our second half of the program. Mathan, can I get some concordance with Adam, or are you going to give us a variant view? Let's talk about Australian Clinical Labs.
Yeah.
What do you think, you mate? Is it a buy on the basis of great business come to prominence some future, even if it's not as good as last year, or to Adam's point, is last year as good as it gets and the future's not quite so bright?
Yeah, I think Adam's right. It's a thematic play. You had a theme that played out, and it's like online. Everything online just went boom, and then everyone realized they're not all as good. And I mean, you're right on the thematic that Sonic. We've actually been in Sonic. It's pulled back.
Yeah.
We're fine with that.
Okay.
The underlying model is phenomenally good. It's diversified. It's global. It's ACL with steroids to the nth degree.
Right.
So the testing side of things is phenomenal, and on a global basis, that will be around for other uses. What they do, Sonic does well, is to put scale through their operations, and that's where the margin comes from.
Okay.
ACL doesn't have that. So that's why they're acquiring. They're trying to get scale. But at the moment, what they do isn't big enough to make the difference. Market got excited. You always, when these things get priced in, it's like pandemic forever. In theory, that just doesn't last, right? Because everyone will be dead. So in that context, you've got to be realistic.
Let's hope that doesn't happen.
That doesn't
even
happen.
for ACL shareholders, I'm sure they'd happily make that trade.
So it's a thematic momentum trade, and you've done well. You can see the previous peak; it ran over $6. That was overpriced. It's coming back. I think it's a sell. I think you've got to look at. If I was looking for that kind of thematic, Sonic is by far the best.
Okay.
But if you are looking for something slightly different with the pandemic, I'd look at Ansell.
Right.
Global, health and safety play. It's a manufacturing cycle. Manufacturing is pretty strong. This has been beaten up, and everyone got, again, overly excited about pandemic forever, and then it got priced back. So it's come back a fair way. I think Ansell's a really good global business. It's one of those ones where Sonic and Ansell, you can buy and hold the long term. They're really high quality long term global businesses, and they both are giving you a decent pullback. So you can buy them and hold them for a number of years.
Beautiful. I like the idea too with Ansell of being, once the testing is over, the kind of echo, the side effects of, let's make sure we don't get another one. Let's make sure we keep the PPE requirements up.
And the thing is that what you pay for Ansell products is such a small cost of your production, and they're so good at it, you're very rarely going to change once you use them. So that's the beauty of them.
Beautiful. Thank you, sir. We'll put that down for a sell for both Mathan and for Adam on ACL, Australian Clinical Labs. Let's go to a question from Sam, who asks about PlaySide Studios. Now, I'm going to say it's one I don't have any information on. I have information on. I've never covered, I've never researched. So, Sam, just like you, I'm going to be sitting very quietly and listening very intently to see what our experts make of PlaySide Studios. Sam says, I just wondering if you could cover PlaySide Studios on the program. We certainly will, Sam. Mathan, I'm going to start with you. Before I ask you about your view on the stock, I'm going to ask you to tell us what the company does.
Basically, it's online gaming. That's where they're heading to. They've got really good relationships. Now, this is like, it's a bit like when they go to like a biotech. It's about the partnerships that they have that confirms where they're headed and how well they're likely to do. And they have pretty good connections, which kind of gives me a bit more strength. Again, I had no idea about the stock, so I had to read through. But I've actually been trying to pick these gaming stocks for a while now, and it's been bad. So I've lost a fair bit of money. So, I mean, look, I got out, but the trick here is you can get suckered in. The macro thematic for online gaming is huge. It's huge. It's a cultural change. It's hard to see. I see my kids, and you see how they get engaged, 100%. And it's amazing. And people don't turn up to watch tennis and cricket, but they turn up to watch indoor stadium, watching hundreds and thousands of people watching a bunch of geeks sitting there playing a computer game. Go figure. And I watch my daughter, who I think is probably smarter than me, actually playing the online game and watching it on YouTube of someone who's already played it. So the thematic in this is huge. We just don't grasp that. And I remember pre-COVID, when I went to Malaysia, 10 o'clock in the morning, I'd go into the internet cafes, hundreds of people playing games non-stop. So this is huge globally. So there is a big market. We just don't get it. So I am interested. Has not been a great thematic to invest. That's the problem. Some of these thematics are great, but as an investment doesn't always work out. So I would caution you to be very careful. I wouldn't jump in, but it's one of those ones where I put a bunch of stocks to keep on the list and see how they do. I'm happy to let them run 10, 20%. Because if they do deliver and they go in the right places, this thing could go a long way. But most of them don't. So that's why you've got to be cautious.
Very good. That's a challenge with innovation, right? Whether it's in mining, in biotech, or in technology. Is it a sell for you or a hold?
At this point, with where the techs are, I think it's a sell. I think it's just too hard. But it's one that I want to keep on the shopping list because God knows, if they do come up with something, and then execute and the numbers start to move, you want to be there. But happy to let the first 20, 30% run. It doesn't matter.
Makes sense. Adam, I've never felt older than when the kids these days want to go and watch someone play a computer game. I'm like, I'm happy to play the game. I'm happy to go and watch sport. Watching someone else play a computer game means nothing to me.
100%.
But I'm very aware, as Mathan already said, I'm not, the kids these days do things differently.
Absolutely.
Does that make PlaySide, even despite 150% run up as we saw on that chart before, is it a buy? Has it gone too far? Is there too much uncertainty? What do you think?
So, it prefaces it's a hold for me. The reason is that there's a couple of things. My 11, 12-year-old son Exactly right, Mathan. They don't watch TV. They're all on YouTube, and it's content on demand, and they're watching people play their games that they play. And then even while the other game's loading up, while they're playing it, they're watching another game being played as well. So it is all encompassing, and it's pretty scary, to be honest, how much they get into these things. And it's just all, and every single dollar pocket money wise goes to these games.
Yeah, right.
And I used to do it as well with my Commodore 64. I'm not that old, but I am anyway. But look, let's get back to this one. PlaySide, look, it's an interesting business, and what Mathan talked about was those partners. Now, they just got a fixed contract with Activision, Activision, which was a massive combining of two massive US businesses together, and that was a 10-month contract. So PlaySide actually does the development work in the back end for these online games. Okay, so that's their business. They're coding, they're making sure that these games actually get to the stage. And then they've got all these royalties that are coming in from some of the games that they've been creating. And they've got certain games in there as well that are new games that are moving forward. So online shooter games and all these kinds of things. So Meta is another one. They've got some really good sort of businesses that they're partnering with. So that makes me feel comfortable. They've also got a business in NFTs. So again, I feel old, but NFTs, and they're actually doing some selling and getting some royalties off that as well. For me, it's a hold at 94 cents. It looks like it's had a good run up. It's around that dollar mark. I think you'd be a little bit cautious. It could definitely come back again. But I think, you know, with the contracts and things like that, I think it's worthwhile having something like that in your portfolio, especially with that thematic backdrop of these kids and the amount of money that's going into the gaming sector.
Interesting idea, interesting theme, but a hold for you for now.
Yeah.
Now, gents, I've talked for too long, so we're going to have to speed through a little bit more quickly the last three. That being said, they don't get much more different than PlaySide Studios and then MaxiTRANS Industries. Faye says, could I please have your expert panel's opinion on MaxiTRANS, please? It has faltered badly, in my opinion, since its consolidation of 1 share for 5 some time ago. It sold its trailer business and paid a great dividend, then raised more capital. I've never heard the stock discussed on your forum, and I wonder, could it be a turnaround now under new board members' steerage? I'm going to assume you wanted that pun, Faye. If you didn't, I love it, so well done. Adam, let's kick it off with you, mate. MaxiTRANS, not a great performance thus far, Faye says. Is now the time to maybe jump on for a turnaround opportunity? Yeah, so with those revenues and that consolidating of those operations with that trailer business, I think it's a little bit tough at the moment going forward. For me, it's auto components. Look, yes, that obviously the industry is continuing to move on, and I think that there's something there. But for me, I would be cautious on this one. I'm going to say it's a hold, and I think there's better value elsewhere. Beautiful. A hold on MaxiTRANS from Adam. Thank you. Now, again, Mathan, not too many different businesses than PlaySide and then MaxiTRANS. One very virtual, one incredibly real. Yes. By the way, the latter probably more necessary than the former, although if you ask the kids, they'd probably disagree. What do you think, mate? MaxiTRANS, is it an opportunity at this sort of price, given what's been going on? Is there a turnaround in the offing, or is it too much, too hard, too complex?
I think you've got to be careful with mining services. It looks cheap, and there's a reason, because the cost pressures are big, and you know, whether it's wages, input cost, all of those things, fuel, all of those are biting them. And then you put it into the context that they write revenues in contracts. So the revenue is capped, but the costs keep rising. So their margin gets squeezed. So that's why. And if you look at the big miners, the capex growth outlook is actually negative for the last number of months. So they're not investing more. So it's a tough macro, and then you've got a rising cost environment. I think mining services is really hard at the moment. I think if you've done well, great, take your money, stay out of it. The reason the miners are doing well is because they're not digging up more stuff. And so this is the time when they're investing and capex goes up, you want to buy. So I think it's high risk. I wouldn't be there.
So you sell?
Yeah, I'd be selling and going somewhere else.
That's a sell on MaxiTRANS from Mathan. Thank you, mate. We'll stick with you. I want to ask you about IGO. This was formerly Independence Group. Speaking of miners, this one's a mineral explorer. This is exactly the capex kind of idea that you were talking about that MaxiTRANS is not going to benefit from. Difficult one, not so dissimilar from biotech in the same kinds of ways of hoping to find the next big thing. Maybe different businesses, but conceptually from an investment perspective, you're saying, can they be successful? Can they strike gold literally in this case, rather metaphorically with biotech?
Well, they used to hit gold too.
There you go. IGO, is it a buy, hold, or a sell?
Look, this is a great business, great management. on ausbiz for 2021, this was the stock of for the year
Hey,
for
nice.
me.
Okay.
Yeah.
And it's had a huge run.
Hitting all-time highs today.
Yeah, actually,
So,
I
you
got
go.
out too early in that context.
Look at it.
We got out and
That's
it's
remarkable.
gone even higher.
Yeah.
Look, they went into lithium. They're buying more nickel. Management is top quality. Now, if you're looking at the resources, you got to remember commodities are at all-time high. Inflation play. Nobody believed it. Now everyone believes it. Everyone's buying commodities. So you look at the big diversified players, BHP, Rio, and then you get to MinRes, IGO, and South32. Right? These are the big five that you can. It's idiot-proof. You buy, you're getting a decent amount of exposures, and IGO is one.
Okay.
Lithium and nickel play. Look, I can't get myself to buy it right now because I think commodities have gone too hot and economic downgrades are coming, and that'll bring back commodities for the short term, short to medium term, and that'll give you another buying signal. At the moment, it's done really, really well, but I think you're paying too much.
Doubled in the space of 12 months. Are you selling if you own it, or are you hanging on?
I think you start taking some off and take profit. I'd be saying, you take 30%, see what happens, and then you take another 30%. You've got to sell into this strength.
I'm going to put you down for a sell.
It's a tough cycle at the moment.
Adam, you were a bit excited seeing that chart before. I'm going to assume
Absolutely.
either you or your clients or both at Shaw & Partners are in this one.
We have a lot of clients in this one.
Is it time for them to say, it's been a great run, but I'm taking my money? Is it time to say, hey, let this thing run? Or is it time to say, you know what, it's always good to buy great businesses, growing businesses, because if they're worth even more in the future,
Agree.
you don't want to compound the error by not buying it. Where are you at?
So we've officially got a buy on it at Shaw & Partners, but the price target is lower than where it is today. Okay, so it's very, very difficult. And I think, if we did that third, absolutely. Let's take a little bit off the table at these levels, because we know commodity prices are at all-time highs. I'm just repeating exactly what Mathan just said. But however, this one has done very, very well and really, really comfortable with it. One, because they were looking to take over a Glencore acquisition, some Cobar copper mine. They didn't go ahead with that, and I think that was the right way to go. Yeah, that was the right way to go. In interest of time, I really like this story. I think it's fantastic. It's future-facing businesses, as in it got rid of gold. It's now in the lithium space. I really like it. They will do some more strategic acquisitions. I think you just got to be careful here, but take a little bit. I'm going to say hold.
Hold, okay.
Because I don't want to go against Rocky, my analyst, who's got a buy on it, and he's picked this one perfectly.
Well done.
So, hold, but just be careful.
Shout out to Rocky. Let's finish off with a company that is in the, I'm not going to call it rent-a-tradie space, it's in the marketplace space when it comes to finding and hiring tradespeople. It is Hipages. Thomas asked for a view on Hipages. Adam, let's finish our top 10 or 10 stocks for today with Hipages.
On a high?
Oh, there you go. So you should be in the host seat, mate. You're wasted over there.
All right.
You're wasted over there. That being said, you're not wasted over there because you are the man who's going to tell me whether
Right.
Hipages is a buy, hold, or a sell.
If we get the chart up, it'll really tell everything about this
We'll get
story.
the chart. There it is.
Rightio.
Oh,
So
dear,
do I
dear.
need to say any more?
I don't know. Well, it depends whether it's going to keep going or turn around.
Yeah, look, the thing is that they've reduced recurring revenue by, and the market's downgraded their forecast from sort of 3 to 6% per annum. So that's where you're getting this, and it's going to be a tough cycle going forward, higher churn and those kinds of things. Both trading subscriptions have gone up 20%, but the revenue isn't coming in the door. So for me, I would be very cautious about this one at $2. I'd say it's a sell.
A sell. Thank you, Adam. And Mathan, let's finish with you. Hipages, is it the business of the future? Is it oversold? Is it overbought? Is it simply just one to avoid? What do you reckon?
Yeah, I'll do it quick. I mean, have a look at Freelancer. All of them have the same problem.
Yeah.
The simple anecdotal evidence, you couldn't get a tradie to do any work previously, but now you can.
True.
That just tells you things are slowing down.
Okay.
And these guys have gone through the pandemic, got smashed, and I think Adam's right. I think it's going to be tough. But I am keeping an eye on it because when these things turn, people don't want to touch it because it's fallen a long way. That's the time you want to buy. So keep an eye on it. Freelancer, Hipages, when the thematic turns and tradies start to do demand and then start to run and numbers improve, you want to be in it, but you don't need to be in it right now.
Fantastic. What a wonderful show. We've heard about plenty of companies that the guys love, plenty that don't love at all, but more importantly too, if you've been paying attention, plenty to put on your watch list for the time when the business or the share price starts to turn. Mathan Somasundaram from Deep Data Analytics and Adam Dawes from Shaw & Partners. Let's wrap up these last 5 companies. We had 2 sells on Australian Clinical Labs, unfortunately neither guy being fans based on where the business is going and the thematic that's playing out. PlaySide Studios. A kind of interesting business. A hold from Adam, a sell from Mathan, but again, one of those ones to keep an eye on. MaxiTRANS hasn't done spectacularly well, and unfortunately, neither gentleman expecting it to do much better than that. Adam keeping it on a hold. Mathan is saying sell MaxiTRANS. IGO, one of the better business, one of the top 5, Mathan says, although he's saying it's a sell. A hold from Adam, it's done remarkably well, but now might not be the time to add more. And Hipages, a sell from both Adam Dawes and Mathan Somasundaram. It's been a spectacular show. I hope you've enjoyed it. Some great insights. You've been taking notes. You have been very, very well served by Adam Dawes from Shaw & Partners. Thank you, Adam.
Yep, thank you.
And Mathan Somasundaram from Deep Data Analytics. Thank you, Mathan.
Thank you.
Thank you for watching, and that's our show for today. Any stocks you'd like us to cover, make sure you do flick us an email. Very simple. The call at ausbiz.com.au or tweet us at ausbiztv. And a reminder, we can find all the stocks you have in the calls portfolio. To do that, simply go to ausbiz.co/portfolio.